In this video, we'll be talking about 5 of the best exchange-traded funds that allow you to invest in the S&P 500. For those of you who may not be familiar, Standard & Poor's 500 or S&P 500 in short is a stock market index tracking the stock performance of 500 largest companies listed on the stock exchange in the US, and it's one of the most commonly followed equity indices. And in this video, we'll be talking about 5 of the best ETFs that allows you to get exposure to S&P 500 and have your investment passively. The first one is Vanguard S&P 500 ETF with ticker symbol VOO. VOO. This index has a very low fee of only 0.03%, which is just a slight fraction of a cost, very low cost, and it gives you exposure to the S&P 500 as a result of that. It's been incepted since 2010. This fund is mainly geared towards growth as a result of the S&P 500, but it does also offer some distributions, currently hovering around that 1.5%. In terms of the past performance of VOO, if you look at it, the annualized return since inception is at 13.4%. Its 10-year annualized return is 12.6%, 5 years annualized return of about 9.5%, 3 years annualized return of 9.8%. The 1-year return was negative at negative 8%, and the year-to-date return at 6.3%. And this was based on data as of end of January of 2023. Majority of companies here are large cap businesses with a blend of investment styles. As for the sector breakdown exposure, the biggest exposure is to information technology at 26.5%, followed by the financials at 11.7%, and following that we have closely the consumer discretionary at 10.6%. Looking at the top holdings for VOO, we have companies such as Apple, Microsoft, Amazon, Alphabet, Google, Berkshire Hathaway, Alphabet Class C, Nvidia, ExxonMobil, United Health Group, and Tesla. And lastly, as pointed out, the distributions for this fund hovers around that 1.5% are paid on a quarterly basis. Based on the last dividend distributions paid, we saw the amount of $1.67 paid per share for this specific fund. Our next pick is one from iShares BlackRock, iShares Core S&P 500 ETF, the ticker symbol IVV. The last trading price for this fund was at $398.25. Year to date, showing a positive return of 4.76%. It also has a very low expense ratio of only 0.03%. Similar to VOO, the IVV is available for investors in US dollars, and it gives you exposure to large established US companies, pretty much the 500 largest cap US stocks that are available in Standard & Poor's index. As for the return for this fund, the 1-year return at the end of January, if we hover over to that just so that it's more comparable, it was showing to be down by 8%. The 3-year annual return is positive 9.9%, 5 years annual return of 9.5%, and 10 years annual return of 12.6%. Very much similar to that of what we saw for performance of VOO. The inception date for IVV goes back to the May 15th of 2000, and this fund has been around quite some time based on that. It does also have a distribution. As you notice that the distribution currently at the 12 months trailing yield is at around 1.6%. Very much similar to what we saw for the VOO. As for top holdings, again, very similar funds: Apple, Microsoft, Amazon, Nvidia, Berkshire Hathaway, Google, you name it. It's just that the percentage of the weightage that you're seeing here is slightly different. This is as of the end, the February 23rd. This is where the weightage for these funds are. Lastly, if you look at the sector breakdown, we have biggest exposure here to information technology, followed by healthcare and financials. Following that closely, we have consumer discretionary and industrials. With that, we are going to move on to another fund. This is available for Canadian investors in Canadian dollars. It's iShares Core S&P 500 Index ETF, hedged for Canadian dollars, with ticker symbol XSP. It's also showing a positive return of 4.6% year to date. If we look at the overall return, the 3-year annual return is at 8%, 5 years annual return of 7.7%, and 10 years annual return of 11%. Just goes to show you for these type of funds, the pattern that we've seen here, the longest that you hold on to them, the annual return is showing to be higher. So it pays to be patient and hold on to these funds for longer period of time, at least based on what we're observing here. For the XSP, the distribution yield is also at 1.5%. If we look at the fee though, here is slightly higher. It's Canadian dollar funds with a fee of management expense ratio of 0.10%. Still quite small, but just something for us to be mindful of. Majority of the holdings here are actually pretty much, it's the IVV, the iShares Core S&P 500 ETF, index ETF, and that's the underlying funds, but this one is just hedged for Canadian dollars. Moving on, our next pick is one from BMO Global Asset Management, ZSP, BMO S&P 500 Index ETF. It is also offered in Canadian dollars for investor through a Toronto Stock Exchange with an annualized distribution yield of around 1.5% and a quarterly distribution payment. The management expense ratio here is slightly lower than the XSP at 0.09%. Looking at the past performance for the SP, you're noticing here that the 1 year return at the end of January was at negative 8%, 2 year annual return of positive 6.5%, 3 years annual return of 9.3%, and 5 year annual return of 11%. The inception date for ZSP goes back to November 14 of 2012, and it does pay its distributions on a quarterly basis. And if you look at the top holdings, we are noticing companies such as Apple, Microsoft, Amazon, Nvidia, and Berkshire Hathaway as the top 5 holdings for this company. When it comes to the sector breakdown, the top exposure is to information technology, followed by healthcare, consumer discretionary, financials, and communication services. And lastly, we have the fifth and final fund to review, which is Vanguard S&P 500 Index ETF with ticker symbol VFE. It is one that I personally am invested in for majority of my exposure to the US stocks. It has a similar management expense ratio to that of ZSP at 0.09%, and it was last traded at a price of $95.99. It has $7.1 billion in assets under management. VFE has been around quite some time. Its inception date goes back to 2nd of November 2012. Looking at the past performance of VFE based on market price, if you look at it at the end of January 2023, the year-to-date return was showing to be positive 4.33%, 1 year return of negative 4.32%, 3 year annual return of 9.7%, 5 year annual return of 10.9%, and 10 year annual return of 15.5%, which is just quite decent return for this fund. If we look at the main holdings here, majority of them of course are at large capitalization at close to 80% exposure, and pretty much every one of them are in the US, as not surprisingly we indicated earlier on. The exposure is mainly to information technology at 26.5%, followed by healthcare at 14.7% and financials at 11.7%. And in terms of the top holdings, we have companies such as Apple, Microsoft, Amazon, Alphabet Class A, Berkshire Hathaway, Alphabet Class C, Nvidia, ExxonMobil, United Health Group, and Tesla. Well, I hope you enjoyed this video and gained something of value from it. If you did, don't forget to smash that like button and subscribe to our channel. Here on Momentum Finance, we post every week videos about investing, including investing in dividend stocks, growth stocks, penny stocks, and crypto. You'll talk about investing in real estate and ways to reach financial freedom. Thank you, and I hope to see you all next time.